I just don't think that enough people have a big enough imagination of this upcoming cycle I'm expecting. I mean, the bond market is in trouble for really arguably the first time in modern financial history. Bondholders are getting absolutely demolished and crushed. If central banks and government is going to try and save that market, the amount of liquidity that's needed is going to send assets very high. How many COVIDs are we going to get if they try and bail out this market that we're in today? You may get 2, 3 COVIDs. So if that happens, it's impossible to speculate on an asset as scarce as Bitcoin, but I think 250,000 to $1 million is the imagination I have in that range of just how big this can get. And that's based on all the liquidity that's going to be required to make this market solvent.
Strike CEO Jack Mallers believes Bitcoin prices could get as high as $1 million per coin when central banks begin the next round of money printing and quantitative easing exercises. Mallers warns that a severe crisis is brewing in the bond market, and the Fed will be forced to step in to stop an implosion that could pull down the entire financial system. The bond market is important to every central bank and government, but even more so to the massively indebted US government, which desperately needs to issue bonds to pay its huge debt expenses and other equally massive obligations. According to Jack, herein lies the problem. These obligations have become too big for the government to handle, so it keeps borrowing from future generations to take care of often the wrong issues. In a recent interview with David Lin, Jack warned that the next QE rounds could be thrice as large as those printed during the pandemic. According to an article from Nasdaq.com, all-in money printing was approaching $13 trillion as of mid-2021, $5.2 trillion on COVID costs, $4.5 trillion for quantitative easing, and about $3 trillion for infrastructure development. Comparatively, this cost more than the US spent in its 13 most expensive wars combined. The $5.2 trillion spent on personal relief checks, vaccines, unemployment, and other purposes is larger than the estimated $4.7 trillion spent on World War II in today's dollars. If Jack's prediction is right, and the Fed and other central banks unleash an even larger round of money printing on the global economy, asset prices will skyrocket wildly, and fiat currencies will lose even more value. This is probably why Jack proudly announced earlier this year that he was going all in on Bitcoin and completely away from the US dollar and other fiat currencies. While the latter has lost more than 90% of its value in the past 100 years, Bitcoin has increased by thousands of folds and remains the world's best performing asset since it was created. We will now bring you clips from Jack's highly insightful discussion with David Lin. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also share your thoughts and comments on the discussion in the comment section. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I'm a long-term holder of Bitcoin, and I have the opinion that Bitcoin's been in a bull market for 15 years. The highs have always been higher and the lows have always been higher. And I think more of the world is waking up to the idea that if you've got one currency that's fixed in supply, and then you've got another currency that's being rapidly inflated in supply, then the one that's fixed in supply is going to appreciate in price against the one that's being inflated. And so I think Bitcoin is going to go up against the dollar, and more people are subscribing to that thesis. So it doesn't shock me that Bitcoin is the best performing asset again this year. I think the narrative that we're living through right now is, my favorite metric is global debt to GDP. The way I like to think about that is the amount of borrowing our governments have done from our future versus the growth they're producing to pay that back. And so we've borrowed a tremendous amount of time and energy from our future in the form of money with no way of paying it back. And that loss has to be realized somewhere. And I think the market is waking up to the idea that the government and central banks around the world are planning to realize that loss through debasing the currency. And you're seeing that in inflation metrics all the way down to New York City. And so if that's the case, it's a race to own hard assets, and Bitcoin's the hardest, most advanced money we've come across in human history. And so I think the recent rally, the adoption of an ETF on Wall Street, a lot of the narrative is they're going to socialize the loss of global debt to GDP and all the deficits through inflating the currency, and you better not own dollars. And if you're going to own something, why not Bitcoin? I like the Arthur Hayes quote of Bitcoin's price equals technology plus fiat liquidity. So it is a technological revolution. It's an innovation. Satoshi Nakamoto solved a computer science problem that was perceived to be insolvable before. And so the technology is valuable, and the technology becomes more valuable the more it gets adopted, the more it provides utility to consumers, and there's network effects and economies of scale and all of those buzzwords. But then there's the fiat liquidity piece. And so Bitcoin seems to trend with liquidity cycles within the broader macro environment, within the central bank environment. And so I think it will always, at least in the nearest term, have some correlation to the liquidity available in the market. The funny part about today, David, is high interest rates in America seem to be inflationary. Low interest rates seem to be inflationary. The deficits are just too big that everything's inflationary, which I think has resulted in Bitcoin just trending up no matter what. But I do expect it to be relatively correlated. It'll take some time. This is my third halving as a Bitcoiner. I've been in the space 11 years. I think of it as an inventory reduction, like a commodity inventory reduction. I don't think it's something that the market can necessarily price in or not price in. I think of it like there's one natural seller in the market, and that's the commodity producer. That's the miner. They have a commodity premium. There's a cost to produce the asset. And in order to pay down the cost that they intake in producing it, they sell the finished good that they produce. And if that is going to be reduced by 50%, then the cushion, the natural sellers are reduced by half. So all that means to me is the cushion that the market has to enter new price discovery is just significantly less. If for whatever reason, there's a newfound demand cycle, like interest rates lower, or some new nation state adopts Bitcoin, whatever that is, you're going to enter price discovery in a lot more violent fashion. So I just consider it an inventory reduction, just like the 88 drought for agriculture commodities. And that's why I think you tend to see cyclical behavior that follow the halving, is because there's less cushion and less padding for the market to take on new demand.
You use the words hard asset to describe Bitcoin. Can you just elaborate on what you mean by that?
Yeah, hard. It's a simple concept. It's the hardest to produce. So how hard is it to make more of it? So housing is harder than dollars because it's harder to create more housing than dollars, but Bitcoin's the hardest money of all because it's the only money that has a scarce fixed supply. So in my opinion, Bitcoin is the most advanced money ever created in human history because it's the hardest money, and money tends and trends to be one, and the one it finds is the hardest to make more of, because it's then the easiest way to persist and store value through time and space.
While speaking at Bitcoin Atlantis in Madeira last month, Jack described Bitcoin as the hardest money ever, harder than gold, and definitely harder than all fiat currencies, including the US dollar. He argued that Bitcoin's capped 21 million supply and fixed issuance schedule make it superior to other reliable stores of value like gold. If there's enough demand for gold, we will find more in the ground, Jack said. You've got to solve time travel to mine more Bitcoin. That's why we are at $60,000 right now. It's because Wall Street wants more Bitcoin, and they can't travel to the future and get it. In another interview with Crypto World, the Strike CEO said people who hold Bitcoin now will never get rid of it because the leading crypto asset is the hardest money, the scarcest asset, and the most performant asset in their portfolio. Let's get back to the interview as Jack gives his $1 million price prediction for Bitcoin.
I just don't think that enough people have a big enough imagination of this upcoming cycle I'm expecting. I mean, the bond market is in trouble. For really arguably the first time in modern financial history, bondholders are getting absolutely demolished and crushed. Now, David, who owns bonds? All of our banks. So our bank deposits aren't there because the bonds that were purchased with my deposit is underwater. And so if central banks and government is going to try and save that market, the amount of liquidity that's needed is going to send assets very high. I mean, you can try and do napkin math. And I joke, like, how many COVIDs are we going to get if they try and bail out this market that we're in today? You may get 2-3 COVID. So if that happens, it's impossible to speculate on an asset as scarce as Bitcoin. But I think 250,000 to a million is the imagination I have in that range of just how big this can get. And that's based on all the liquidity that's going to be required to make this market solvent. We're talking about pricing Bitcoin in a piece of paper that's being actively debased, right?
Okay,
So
sure.
maybe a more interesting question is, how many houses can I get for my Bitcoins in a year? But given the fact that it is in dollars, I think that's where your imagination has to go insanely high because of the predicament that the government is in. On the other side of that, though, on the talk of adoption and just the notion of it, I think price is the most accurate KPI we have into Bitcoin adoption. What price tells me is a rather accurate measurement of how much of the world is using Bitcoin as money. And so I expect more of the world to take on Bitcoin as money, whether it be for any form of use case or value to them, because it is so appealing and solving so many different problems. So I expect adoption of Bitcoin as a monetary unit to go up.
Mhm.
And then against the dollar in particular and other fiat currencies, I expect it to be violent to the upside. I'm almost running the Michael Saylor trade personally. So what I do, I only own Bitcoin and I spend on credit. So it's what Sailor does. You borrow the weaker currency and
Okay.
hoard harder currency. So I have credit cards and I spend on those. And
Right.
then when I need to pay those down, I sell the Bitcoin to pay them off. I do bill pay with Bitcoin, but in that way, I'm borrowing the currency that only goes down. So I get to spend it without ever needing to hold it. And I hoard the currency that averages going up 50 to 100% year over year. So everything around me gets 50 to 100% cheaper year over year, right? It gets a half off every single year. And I spend on a credit line of the currency that's getting actively debased by my government. And so I'm just running a short trade all the way down to the penny. I think that if this gets adopted like a GameStop Robinhood type situation, you're going to run the banking institutions in the US insolvent. If we all hoard Bitcoin and spend on a credit line of credit cards, then banks are going to go under. But it's very obviously the financially responsible thing to do. When my buddies are like, how could you possibly do that? I look them in the eye and say, why would I own something that only goes down? That's the US dollar. So if the bank is going to give me a line of credit and I can afford to not have to own it and I get to own and hoard the thing that only goes up, I'm a college dropout, David, but that's a very simple trade. And so I don't know. We're hopeful at Strike to launch some products that make this a lot easier and more user friendly. And I'm really curious to see the adoption rate of it because I think it's obvious.
At the beginning of the year, Jack Mallers announced in a post on X that he no longer owned US dollars and was all in on Bitcoin. In a thread that now has almost 1 million views and over 12,000 likes, Jack noted that there was no sense in owning any dollars because of the rapid debasement caused by excessive money printing and overspending. Here are some of the tweets from the thread. I no longer own any US dollars, not even a penny. As an American millennial, I love our country, but I oppose our money. I'm all in on Bitcoin, setting my sails toward prosperity or going down with the ship. I believe it's important to take a stance now more than ever. In 1971, the US abandoned the gold standard and assigned itself as the world reserve currency issuer. It's been a post-industrial economic wasteland ever since. The money printing has created hyper-financialization, hyper-asset inflation, and a disgruntled population. As the US devalues its currency, its citizens are forced to use assets to store their wealth, such as real estate and stocks. This drives the prices of these assets up, also known as asset inflation. The result? A massive wealth gap. Printing money makes those who own assets richer and those who can't afford them poorer. Jack also noted that exiting the US dollar means taking a stance against funding unnecessary wars, asset inflation that benefits only the rich, and living in a sad, angry, indebted society. He added that he chose Bitcoin because it is the best expression of fiat debasement. Instead of the constant reckless money printing, Bitcoin has a fixed supply that can never be inflated. Jack also noted that Bitcoin symbolizes personal freedom, equal opportunity, a free market economy, innovation, and progress, all of which are values on which the United States was founded. One of the last posts on the thread reads, "Let's look at the numbers. In the last 5 years, if you saved in dollars, housing got 60% more expensive, oil got 59% more expensive, food got 29% more expensive. However, if you saved in Bitcoin, housing got 81% cheaper, oil got 79% cheaper, food got 83% cheaper." What are your thoughts on Jack's $1 million Bitcoin price prediction and his decision to completely exit the US dollar? Please share your thoughts, comments, and observations in the comment section below. Also, give this video a thumbs up, subscribe to the channel, and turn on the notifications bell so you never miss any of our videos featuring insightful analysis and interviews from the industry's brightest minds. Thanks for watching.